Hello and welcome. You're tuned into CNBC TV 18 Prime. Let's get cracking on a brand new edition of The Big C from the CNBC TV 18 Prime Ionic Wealth Angel One studio. I'm Manisha Gupta, back with your daily dose of commodities, cryptos and currencies. Well, it has been tale of two markets emerged on the Wall Street overnight. While the 30 stock Dow rallied over 500 points to close at a record high, on the flip side, we also had the tech-heavy Nasdaq slipping. The S&P 500, meanwhile, was higher at close, notching its third positive session in a row. AI darlings, the likes of Nvidia, slipped, reflecting the uneasy sentiment among investors that tech valuations could be stretched. After the recent surge, especially stocks in Asia-Pacific largely gained following that mixed print from Wall Street. Back home then, the bulls have powered the Nifty to above 25,800 levels, as you can see on your screens. Meanwhile, the prices of crude oil notched a third straight day of gains, hoping that the government shutdown in the United States is nearing an end soon. Traders are now looking at a slew of factors ranging right from U.S. sanctions on Russian oil and U.S. government shutdown, even as oversupply fears limit gains. The dollar index, in the meanwhile, is trading steady with the shutdown end in sight. Asian currencies, however, continue to be muted with the mounting uncertainty around the rate cut in the month of December from U.S. Fed. Joining us on the show then is Peter McQuire. He's CEO at Trading.com. And joining us also is Jonathan Bharat. He's CIO, ETO Markets. Gentlemen, hi, thank you so much for joining in. I want to first of all really start with the gold prices because we've seen a very smart recovery and a rebound here. Jonathan, how are you looking at the prices as they notch up back again, $4,100 an ounce, with an expectation that we could be looking at higher highs, if not in this year, then next year for sure?
Manisha, good morning. Look, it was a really good bounce in the price of gold. And I think the market, pretty much when it started on Monday, started to move higher. And I think when we get that movement of potential shutdown, people going back to their normal investing route, and that says buy gold and perhaps sell the dollar at the moment. But I think gold is looking good. I wouldn't be surprised that it tests the highs again this year before we get into the holiday period. Looking quite good, looking quite solid, gold and silver, and looking for it to test higher.
Would you want to put some numbers out then if you're looking at and expecting at further highs in this year? What are your targets for this year? And if there's a range that you would want to share for 2026 for gold, what is it that going to be?
Yeah, look, I think when you look at the range, I mean, 4,100 on the downside, 4,250 on the top side. I mean, that's pretty much it. I would like to see it test through that top, see whether it does actually break through that 4,250 on the top side. We know that it should have a good test of it because that's a significant area of resistance. That's the range I'm looking for. I'm not quite sure why it'll actually break out to the top side. What will be the catalyst for it? But I think traders are quite happy to run with it at the moment, and that'll be the range I'll be looking at.
4250 is what you're talking about for this year. But for next year, are you looking at a wider, bigger range? While this year, clearly, we've seen a $1,500 an ounce of a range. Would you say it's going to be much narrower for the next year?
Look, I think that really depends how the macro picture sort of unfolds. There are a lot of things still to be had. There's still a lot of things to go. I am really still concerned about government shutdowns, concerning the twin deficits there, obviously the private deficit and also the government deficit. They continue to spiral out of control. I think that's something that needs to be done. It'd be interesting to see how the government shutdown will be resolved, whether or not they're going to try to get rein some of the debt in, or whether they're just going to continue to push it down the road, which I think they probably will. Still a lot of macros out there. Still the geopolitical side out there, I still have concerns with. I still think that there's a reset somewhere. We all talk about this. It hasn't happened yet. If that does start to unwind and we see this reset, then I think gold will go significantly higher from here. But really, that's sort of one of those black swan events which we can't see and we can't forecast.
All right. Peter McQuire, getting you in this conversation as well. What is your sense by the end of this year, before we get into the holiday season, and that perhaps is just about 15 to 18 working days from here on? How are you looking at the gold prices then, Peter? And what is your range for next year if you're risking a number there?
Well, man, good to join you, and hello, Jonathan, as well. It's great to be working with you both. Look, I think the first thing, building on what Jonathan mentioned, and I've got a lot of respect for his views because we've followed each other for a couple of decades. I feel as though that it's got extended upside. I feel as though 4,500 is going to be taken out probably by end of month or early December. And the reasons for it is, I think the uncertainty, first off, tariff situation with the Supreme Court. Is there going to be a ruling early? Secondly, what's happening as far as, and we all understand Howard Lutnick's views on it. Also, we've got to take some consideration what's happening with US dollar and the 10-year. And I'm also very just watching it with much, I think, delight. The bounce that we've seen in the last couple of days, Manisha, has been quite strong as far as gold. You've got it running at about 41.30 at the moment. And I think of the way it's going, I wouldn't be surprised to take a 42.25 out by end of week. I just think that there seems to be a fair bit of upward momentum, or certainly by this time next week. So that's where that's rolling. Silver back above 51.50. It's looking strong, and I think probably it'll be back at 53 to 54 by Thanksgiving. So yeah, I think it's going to be quite a dynamic time, and then leading into the end of the year, probably an uptick from those sort of numbers.
And would you want to give us a sense also on what is the range that you're looking at for the next year by now, Peter?
I don't think I need to go much further than the first quarter. I think it'll be at 5,000, Manisha. I think there's a lot of things to work through, those big macro themes. Again, what Jonathan said, and of course, what's happening from the government shutdown. Is it going to get over the line? And it looks like it will. And is there going to be another government shutdown towards the tail end of January? So I think that the 5,000 is very much a part of where it'll be. And let's just see. But I think it'll be quite a dynamic time to trade gold over the next, 3 to 3.5 months.
Oh, well, absolutely. So that is what we have in sense of gold in hand. Jonathan says 4250 by the end of this year, while Peter says 4500. So it's going to be quite volatile, but the upside is what we're looking at when it comes to gold. Jonathan, talk to us also about the way people are buying gold, because this perhaps is the first year on record that we are looking at more investment buying rather than jewelry buying. Do you see, with gold prices trading at these all-time highs, that to be continue as a pattern as we go ahead?
Yes, I do. I think the investor market with their access via the CFDs, the leverage products, obviously the physical and the jewelry is there. The ETFs are certainly very strong when you look at sort of the build in ETF buying. So there is a range of sort of buyers out there. They can easily get access to trading the gold. I do think there's an uptick of the leverage traders, which to me is always a bit of an issue. Because they do sort of create a lot of volatility in the market. But yeah, I think the investor side of it will certainly pick up. I think people have actually shied away from investing in shares because they think shares are sort of a little bit overdone, overcooked when we are at record levels, particularly trying to get that exposure to gold. So I do get a sense that the leverage buyers through the CFDs are the ones which people are moving to, because they can see better value there rather than going via some of the traditional means. So yeah, the investor market, I think, is a standout. And I think more people are going towards that market. They see the price, they buy the price, and they get that return or loss. Remember, leverage is a double-edged sword.
Oh, it is. Jonathan, there also are reports suggesting that almost 70% of the global money is not exposed to regulated gold instruments even now. Do you think there's much more upside from where we stand, given the fact that gold is given such lucrative returns?
Look, I think it has had good returns, and I think the more people get the returns, the more they look to that market. It's always very hard, and I think Peter will lay testimony to this. It's always very hard to pick a high and also to pick a low. The trend is there. If the trend sees there are more investors moving towards the market and in a way and a style, then you'll see that will be fulfilled. It'll only be a major catalyst that'll change it, a macro that'll change the investment sentiment, and that'll cause people to move away from gold. It's always been part of a rotation that people like. The more they see there's no real change in the macros, the more they will walk towards it. The question is whether they go directly via a CFD or whether they go jewelry or however they invest. But I think there is more investment in the sector.
What about the global central bank buying, Peter? I mean, that really has been a running theme. And this year as well, till time, we've seen 650 tons done already until the month of September. October, November, December, those numbers are yet to come. But would you say that we're very close to that 800 to 1,000 ton mark yet again?
Absolutely, Manisha. I mean, sorry.
No, you go, Peter. No problems.
You're very kind, Jonathan. Thank you. I'm not sure if it's for me, Manisha, but central banks already bought 1,080, as we know, 1,051 and 1,089 tonnes in the last 3 years, and their buying has been just extraordinary. You've got 23 central banks that have bought very, very strongly this year. So the overall appetite across the globe is just immense when you're looking at central bank buying. And the velocity, I think that you'll probably go close to that 1,000 tonnes, but the overall, I think, attraction is really coming back. What Jonathan built on as far as retail and mums and dads globally. You know, I travel enough to the Middle East and certainly to India, and it's very much a part of a whole culture, but it seems to be washing now across many different areas of the world, you know, the UK market, certainly if you're looking at what's happening in Europe and of course in Asia, other parts of Asia, you know, Australia, the sector is becoming red hot. And that's been very evident by the amount of people that are lining up to buy physical. Now, you're going to go to the US and go to Costco, Manisha, and buy physical gold in the shop in their shops.
Oh, yes.
This is a normal course now. This is not unusual to see that. Well, it was unusual a number of years ago, say 3 or 4, but now it's very much mainstream, and that attraction seems to be gaining, incredible velocity, and that will only continue, I believe.
Well, yes, you can buy gold on Costco, but in the Indian markets, I have to tell you, gentlemen, that you can buy it on delivery apps and it gets delivered to you in 10 minutes. I mean, that's the kind of market it really seems to be big. Jonathan, a final one to you before we go for a break. And what is your sense on silver now? We're holding above $50 an ounce. Do you see that one holding constantly for the next year as well? And if not, if not that, and if there is some profit taking coming, then what are you looking at in sense of support sides and then targets on the higher side?
Yeah, I think the interesting thing about silver, it didn't quite have the pullback. It had the pullback. It was quite volatile. But when I look at silver, I do get a sense that it's going to continue as well. I think when you see the way it is actually trading at the moment, and you see the demand factor for it, it's more concrete than actual gold. So when we've always looked at that gold-silver ratio, for a while we've been favouring silver over gold, and I think that's still the play. Remember, silver has such a good story as a precious metal and a store of value, but it also has such a good story in terms of its demand side for industry. And I've always liked silver for that. I do get a sense that silver will have a test back to those highs. 55, I think, is something that it will certainly have a look at. It's just holding quite well at these levels, and I wouldn't be surprised to see it push through on the top side. Remember, there's a lot of green demand for it, particularly in the EV space. And I think that's also coming out of China, where there's significant amount of demand there. So I do get this sense that silver is one that still will continue to trade a little bit better over gold over time.
Well, that's about gold and silver looking bullish as in the markets. But with that, we'll go into a very short break. On the flip side, more commodity discussions lined up. We'll talk about metals and energy with Jonathan and Peter. Stay on, gentlemen. Welcome back. You are with us on the Big C at CNBC TV 18 Prime. And let's continue with our conversation. Peter, if 2025 belonged to precious metal, a lot of reports suggest that 2026 could have base metals as its core theme there. With the kind of gains that we've seen in copper, aluminum, zinc, especially coming in on this quarter, do you see a spillover of that in the next year? And what kind of gains are we anticipating into this one?
Well, Manisha, I think, let's look at copper as a starter. We're nearly at 10,800, 10,900 on the LME. There could be uplift, and I wouldn't be surprised. Maybe you're going to see an 11.5, 11,750 as far as uplift. And zinc and aluminium, they're both toying around that 2.5 to 3,000 a metric ton. I think tins at 36,000. So from an industrial standpoint, there will be naturally, I think, more draw on them. There'll be more demand. That was very much a part of the infrastructure and global growth numbers, and they've performed. I mean, there it is from there, up a quarter, 26%. It's not bad, and so they've been quite dynamic, some of them, and that's what it's all about: is identifying where you see opportunity and if you're going to trade those markets. And probably the aluminium story, President Trump, what he's doing as far as rare earths and minerals. I think there's a list of 60 now: aluminium, steel, and of course what he's doing with copper and silver. So yeah, probably upside, Manisha, and I'm not sure how much, but I think it's a sector you've got to have in a portfolio, and if you want to trade it, I think there's plenty of volatility and good opportunity.
Jonathan, as we head close to December, soon we will be talking about asset allocation and the kind of monies that various funds would be putting in commodities as well. So, would you rather put more towards precious metals, or do you think base metals have a better opportunity of returns in 2026?
I think that is a tough question, but I would just go back on the copper, the aluminium, and the zinc. I think when I look at those three metals, I get a sense that this is all short-term stuff, particularly for copper and particularly for zinc. Because when you look at the structure of those markets, copper and zinc are both in heavy backwardations, which basically means that we're expecting supply to come on tap further down the track, 3, 6, 8 months down the track, even further. So I get a sense aluminium's still holding very well in a contango, which suggests that out of the three, aluminium's probably a better weighted one, better weighted base metal to get into. So if I was going to do an asset allocation, I think I'd weigh that into aluminium over copper and zinc, knowing full well also that copper does have a potential for that supply deficit sort of over the next 6 to 8 months, and that's why we're seeing prices sort of under pressure there. So I do get prices sort of going up, but in the 3 to 6 month range under pressure, hence the backwardation. But it does depend on that macro. It does depend on China. Remember also, we did get some reasonable data in terms of CPI numbers out of China in terms of producer prices as well. That's indicating perhaps that China is starting to turn around in terms of its demands, and as a result of that, you'll see that play out in the base metal market. So if anything there, for next year, you need an allocation in your portfolio to copper, to zinc, but I also think it's probably wise to be a little bit more weighted in aluminium.
All right. And let's talk about energy as well, because that clearly has made various headlines in this year, whether it has been about Russia or the kind of tariffs that India continues to see, a 50% and perhaps the largest amongst many. How are you looking at that, Peter? We've seen a range-bound trend in crude oil prices. This is a third straight year that we are heading to close into negative. How would you look at the prices going forward?
I think, Manisha, that's 60 to 64 where we are at the moment for WTI and Brent. I feel as though the structural, first off, there's going to be, the way it's looking, significantly more coming onto the market, which in turn is going to push pressure as far as price to the downside. And I think that once we get into 26, that seems to be the normal course of events. Everyone wants to be short. So, I think probably let's get to 55 as far as WTI and Brent, probably that 58 to 59, and see if there's going to be further falls from there. That's what I'm thinking. And I think that's quite a possibility. I'll go out maybe Easter. There it would be. Get through the first quarter. I think that's where prices will be.
Oh, well, absolutely. The supply glut clearly has been the headline here, even with whatever has been happening with Russia, the kind of sanctions. We haven't seen the crude oil prices go anywhere close to that 70. It's more towards 60 that it has been trading. Jonathan, how are you looking at this market? Do you also think that the prices can go sub 60, or with the winter season approaching, do you think that is one factor that perhaps could balance or support markets?
No, Manisha, I'm a little bit against Peter on this one. I do know that there's a supply story that is been out there for some time. I do get that. I do get a sense that the market hasn't gone down, even that story's been out for some time. I think structurally, I do like it coming into winter. I do think we're heading more to the top side rather than the downside at the moment. I do see this demand scenario, a global demand scenario, starting to pick up. I do see those sanctions in Russia, the geopolitical side on that side, also supporting prices. So I'm getting a sense that the crude oil is at the lower end of its range. I think if it does get down to that 60, I think it's worth a buy. Remember that it's been down here a few times. Every time it gets down to that 60 level, we see significant rises to the top side. $5, sometimes $8, $10, and further. So if anything for me, I think leading into winter demand, I'm quite supportive of prices to trade to the top side. And I'm sort of angling back up through that 70. So it's a 60, 70. 70 is my guess, I guess, as we lead in towards the end of the year.
All right. So, well, yes, not agreeing on crude oil prices on where they could be headed. It's been a volatile market for this year as well. We've seen an $18 of a range coming in. That's probably is what we will see in the next year as well. But Peter, Jonathan, what a pleasure talking to both of you on your sense on how do you look at various commodities. And of course, thank you for helping us out with the price views for this year and perhaps next year as well. Thank you so much, gentlemen, for your time. Really appreciate that. And with that, that's all the time that we have on the show. Thank you so much for joining us here at the Big C at CNBC TV 18 Prime. Thank you.